You are listening to ChartingWealth.com for Monday, the 17th of October, 2016. The market is still in a downtrend on our weekly and daily charts. It was up just barely today, 0.01%. That is for Friday. Derivative oscillator still heated up, going down, and the MACD still plunging. The moving average convergence divergence indicator. We have a down market. A little bit of a green up candle for the 16th. That is only the first day of a two-day candle. We shall see how the week starts. But again, a weak market that has been going down, actually crossed over going down on our two-day chart all the way back to the 24th of August. And like we said, our weekly trend line is also down. If we look intraday, what do we see going on our 4-hour chart? A little bit of an up movement in the morning, and then that was almost all absorbed in the afternoon by the down movement. Still have a downtrending MACD. Derivative oscillators still in the negative. So that is where we are. Hopefully you jumped in to this down move sometime in the morning on the 11th of October. We saw this coming, did we not, my friends? Now, let me tell you where I'm concerned at this point with this down move. Hopefully, and this is one thing that we teach over and over again, whenever you do jump into a down move or an up move, and again, it would be an inverse fund for down moves where you can short the market. When you go in, always think about what a reasonable profit would be and put yourself in a good till canceled sell order, because this market plunged all the way down on the 13th, Thursday the 13th, to 105.74. Now remember, when the getting in was good that morning of the 11th, the high was 108.12 and the low was 107.34. So $2 is a nice little profit margin in there for this type of exchange traded fund. Now, let's go back to our two-day chart. We're going to quickly go take a look at the S&P 500. It too is down, still trending down. It was up 0.05%. And again, very, very little for the day. And again, this is just the first day on the latest two-day candle for the 14th that will complete on Monday the 17th. Let's look at the intraday move. Market was up in the morning, and then we had a doji in the afternoon. It lost almost all of that morning gain. Still in the negative. The derivative oscillator is in the negative, and the MACD is not quite paralleling, still trending down, as is the signal line heading toward it. Okay, now let's go back to our two-day chart. And for those of you who did hop into, we'll look real quickly here on the S&P 500. The entry point again was that morning of the 11th, Tuesday. Okay, now that was for an inverse play. Let's go back to the two-day chart. Take a look at the Qs. The Qs is still in a confirmed up move on the weekly chart. The two-day chart's been in a down move since the 26th of August. We had an up day. It was the most up of our three indexes, 0.12%. Now that's not 12% again, it's 0.12%. Barely up for the day. It is still above the weekly trend line, which has been trending up. And again, because of this schizophrenia that we see with the long chart, that is the weekly chart, going up, and the two-day chart going down, it makes it hard to even consider entry points and exit points, because how has this market, even with the down move on the two-day chart, it's tended to be moving up, because all things being equal, the market always moves in the direction of the biggest chart. So the real plays have been up moves, but how do you get into an up move when your two-day chart's going down? That's where we really try to set our standard trend. Very difficult. It has been difficult since that happened back many weeks ago on the Qs. Just difficult to find a good, solid trade because you can't use the two-day chart. So that's where we were. If we look intraday, what do we see going on? Well, we saw up big in the morning, and that was paired off. It was actually double up as high as it ended up in the morning, and then that paired off in the afternoon on Friday. Okay, Lastly, we're going to go to our 2-day chart. We're going to take a look at gold. Gold was down 0.56%. We've redrawn our 2-day trend line. Gold's on both a weekly down chart and a down chart on the 2-day chart. Derivative oscillators continued to heat up, going down. Let's take a look on the 4-hour chart. What do we see going on? Gold is really still just drifting sideways. Did cross over going up. Back on at 4 in the afternoon, on our afternoon chart on Wednesday the 12th. And it's gone up a little bit, but it's really sliding sideways. And again, we still have all this downward pressure from the weekly trend line and the 2-day trend line. You're going to make your most money when that 4-hour chart rotates over going down. Now, again, if it rotates over going up and it goes up strongly, that's great, but you can see, or I'll tell you for those listening, that the derivative oscillator is also losing its energy, and that push up on even the MACD has been toweling off a little bit. Well, folks, that's where we ended the week on Friday the 14th as we go into the new week on Monday the 17th. I hope that you have listened to, or you plan on listening to, our weekly review and forecast. You need to do that so that you can go ahead with your daily market worksheet and fill out the weekly trends on all 4 of our indexes so you can follow those for the week. It's really important to have that weekly trend line. You need that because that's going to tell you where, all things being equal, the market is going to tend to go. Very, very important. Thank you so much for listening. You want to help us out? Go subscribe at iTunes. Give us a 5-star rating. Say something nice about us. Also, subscribe to our YouTube channel. You can also say nice things about us on Facebook. You can like us there. We love to hear from you on Twitter. Go to the website, chartingwealth.com. Sign up for the newsletter. You'll get a video podcast every day of our review of the charts, plus our weekly review and forecast. God bless from chartingwealth.com.